Hi everyone and welcome to today's morning report on Friday the 18th of September with me, Richard Perry, market analyst at Hantech Markets. The Fed has not moved on interest rates. Janet Yellen gave a pretty dovish press conference yesterday and the markets have reacted. This was not a major surprise in terms of no rate hike, but still the market was pretty perturbed, I think, by the fact that the Fed was focusing far more on international environment than US home situation, i.e., looking at sort of it didn't really focus on the labour market. It focused a little bit on inflation or the lack of inflation, and predominantly the decision seems to have been due to international concerns. Now, this is an interesting switch on what it had been previously looking at. Previous meetings, the Fed had not really been focusing too much on international issues at all, really, and this time it sort of means that it creates a dilemma for the market going forward. How do you really look at the expectation of the monetary policy now that the the driving force behind the move is global issues that Fed are in no control of. So I mean, it is a whole sort of uncertainty element back into this potential rate hike for the states. Markets have reacted in terms of the Fed funds futures are now pricing in a 2016 hike as opposed to even December now. So it's going to be basically a period of time where the markets are going to have to try and figure this one out again. Uncertainty breeds selling pressure, certainly on the equity markets anyway. But let me just show you the dollar. Dollar, first of all, sharply lower on that. No rate hike, no real surprises there. The big movers came in the Treasury markets. Yields on the 10-year very much lower. That's on global growth concerns because at the longer end of the curve, that's it sort of takes more into consideration future growth rather than the shorter end of the curve, which has obviously reacted extremely strongly as well. Two-year yield sharply lower, was at 185 yesterday, and is now back at 168. So really, really big sell-off on that 2-year yield. So in terms of volatility, sharp volatility on equity markets, but still lower. So that is generally speaking not too bad in terms of a signal for the equity markets going forward. And once they settle down, perhaps the continuation of this dovish Fed will pull into a sort of some support for these equity markets. But still, the uncertainty over global growth is a concern for equity investors. So there's no real data out today, so the market will continue to play around with this one today, and it'll be interesting to see how this pans out. But certainly, forex majors are showing sort of consolidating on the euro sterling. And also, interestingly, the commodity currencies are sharply higher because of the concerns or the previous concerns that have been driving those commodity currencies lower, had been over the impact of a stronger dollar. The dollar's weaker today, so those currencies are rebounding. And one of those is the Canadian dollar, the dollar CAD chart, which I've talked about previously as my chart of the day, and this whole divergence, this bearish divergence on momentum, is now pulling on this dollar CAD chart lower. Yesterday, a lot of volatility on this dollar CAD chart. I'll show you the intraday chart in a minute, but it shows continued traction to the downside in the last few days. These momentum indicators are beginning to really pull this one lower. The RSI below 50. That's lowest since June. Stochastics also sharply lower. MACD lines falling away. So all of these indicators are suggesting a correction now on this dollar CAD, and there's no real reason to think that's not going to happen. A close below the where's my cursor? The close below 131.13, which was that reaction low in late August. that would actually complete a near-term top pattern and actually give you a sort of downside target, say around 28.90, I think it is. So that would certainly suggest pressure on these supports. 29.50 comes in as that August low. That is likely to come under pressure, as I said, if we get this closing breakdown today. The momentum certainly suggests that rallies are increasingly a chance to sell. This is the hourly chart. Obviously, that's zooming in. That's that the Fed announcement. You had a sharp retracement of that move, but since then, since the Europeans have come in to trade this selling pressure is coming through on this CAD now, and certainly just moving out. You'd argue that breaking below that 31.13 level completes your sort of breakdown level, and a retest certainly of this low, the initial reaction low of 29.50, but also potentially this reaction low 28.60 as well comes into play. So the rallies are a chance to sell on this dollar CAD now, and you've got the band of support that comes in around 31.60 was the sort of band of support initially. I think that is still an element to look out for. Also 32 figure, so between 31.60 32 figure would be your resistance now, but certainly a close below that 13.113 today would give you that sell signal. So I wish you good luck in your trading on dollar CAD today, and I will speak to you later. Thank you.